Welcome to ATF TV. This is Christine Zhou reporting from London. We are joined by Shahzad Qazi in New York. Shahzad is the managing director of China Beige book and wrote for ATF on China's latest economic figures that were released last week by China's National Bureau of Statistics. Shahzad, welcome to ATF TV.
Thank you for having me on.
Thank you. You wrote that China Beige book was founded to serve as a check on Chinese government data, and that China's latest GDP growth results are nowhere near as optimistic as the official figures indicate. You say this is because China's methodology means it can cherry pick its national revenue data. What's the story here, and what are the disparities?
Yeah, so, Chinese official data has long suffered from lots of problems. Some of the key issues that people have always complained about is that we don't have access to a lot of the underlying numbers to understand where growth is coming from, what sort of price deflators are being applied to calculate the GDP. And of course, the more obvious issues of outright data manipulation, where, the classic example is that GDP figures reported by the various provinces and regions in the country will add up to somehow being higher than what the what the central government is reporting out the GDP to be, where you certainly have to have the central government send the results back to provinces and say, no, these couldn't possibly be right. It needs to be revised and revised down, usually. So there have been these, issues and lack of clarity, outright data manipulation. And then we get into the more murky territory where we're looking at questionable statistical practices. And that's what happened this last time around, where there is a policy within the way the National Bureau of Statistics calculates its data for lots of things, whereby they'll go back and recalculate previous data. Well, why will they do that? They do so because they say, we will only survey firms that are above a certain revenue threshold. And those firms will only be included in future surveys if they maintain that revenue threshold. The moment they fall below that threshold, we will take them out of the survey. But not only will we take them out of future surveys, we'll go back and take their data out from past surveys and revise those numbers. So what you walk away with is this problem where official data is revised sometimes by very large numbers. This last time around, the fixed asset investment figure that I focused on was revised down for the previous year by some 3 trillion yuan. That's a massive number. And if you revise your previous historical data down by such a large number, naturally you're going to boost the growth rate for this current period, which is what happened. So the numbers today look significantly better for fixed asset investment, for GDP growth, and so forth than they would have had this revision not taken place. So that's sort of the behind the scenes of the data problems that you typically face in official data: outright manipulation, lack of clarity, and most importantly for investors, constant revisions. At any given time, you're not sure if this truly reflects what's happening on the ground, or this is just, wonkiness within the survey that the NBS has conducted.
Okay, so what causes them, and what do you think it means for China then?
Yeah, so, this is why we created China Beige Book. As you mentioned in your introduction, we go out there and we survey thousands and thousands of companies, and we don't revise their data. We don't go back and change the numbers. They remain static. Now, the results from those surveys, the first thing is that the economy naturally tanked at the beginning of the year in the aftermath of the coronavirus crisis. We saw some historic lows in that data. Since then, we've seen sequential improvement month over month, quarter over quarter from that downturn. However, the important takeaway is that unlike official data, which on the basis of revisions to previous data, not only in fixed asset investment, but also things like retail sales, is trying to show a year-over-year bounce or somehow expansion compared to last year, we simply do not see that. Every major sector, every industry, every indicator we track the economy on today remains in a contraction compared to last year. The economy is not growing year over year. And this narrative that is taking shape, that Beijing is projecting, that a lot of your sell-side Wall Street analysts are putting out, is simply not being borne out in the data.
Can you tell us a bit about China Beige Book's methods?
Absolutely. So, China Beige Book was created around 10 years ago now. And the core reason we founded this company was that we didn't just want to be another group of China experts writing long essays for investors to read. We wanted to be a company that actually had access to reliable data. because that was the market need. Nobody had access to data other than what the government put out. And everybody based their projections on that. Everybody puts their own little twists and turns on it and models out, but more or less produces what the government is saying anyway. It's turned into a game of can you project what the government will put out? We said, no, we're going to go out there and capture reliable data. Well, how do you do that? So you spend several years on the ground establishing a data collection mechanism where you have access to enough companies, a large number of companies. We have access to firms all the way from Shanghai to Xinjiang. So we cover regionally the entire country. We survey all the way from the biggest cities, the tier 1 cities, the tier 2 cities, all the way down to tier 4 and tier 5 cities, which have been virtually impenetrable so far for anybody or a private entity like ours. So the secret sauce really is being strict about your sampling, being sensible about how comprehensive this needs to be, and and being robust rather I should say in having a very comprehensive sampling approach, and then of course serving across a number of indicators. Our platform today tracks over 100 indicators of business performance because you cannot tell the story by tracking a few headline metrics. You have to dig deeper and you have to be able to paint a rich story on the basis of a lot of data. So that's how China Beige Book does it.
You also argue that there is actual growth in China, but it is not being driven by the services sector, but by the more traditional industrial sectors like manufacturing, commodities, and property. What's the wider significance of this for the Chinese economy?
The wider significance is this. There is a thesis out there that China is transitioned into an economy where consumption drives growth. And that is just, again, not seen in the numbers at all. The Chinese economy right now has been able to expand quarter after quarter, etc., because of what's happening in manufacturing, because of what's happening with external demand. So it's not that somehow it's Chinese domestic consumption which has driven the economy, which is driving growth within the economy, and therefore China is going to lead the world out of this COVID-induced recession. It's actually quite the opposite. China is being driven out of this COVID-induced recession because of external demand for its products, because of what's happening with exports, because of what's happening in manufacturing. And then, of course, you have the internal dynamic at play as far as fiscal spending has been concerned with regards to infrastructure development and so forth. And of course, you're seeing that surge in construction taking place. So again, very old industrial parts of the economy are driving growth, whereas consumption remains incredibly weak. Retail sales is, again, a classic example. We saw retail sales return to growth levels in August. Well, the reason that happened is because the NBS went back and revised the growth figures for August of 2019 down, and that artificially, of course, then creates a very minimal boost in August and so forth. So again, consumption remains very weak. You can see that in our data. Travel, restaurants, hospitality, all of them are either reporting slowdowns again or are having weaker growth than other parts of the economy. The Chinese consumers are not spending money like it's 2019.
And how about the future? What will the year-end story be for China?
I think the year-end story, now we're going to have brand new data out in just a matter of weeks. So we will get the earliest read on where China's economy is headed in the fourth quarter, the earliest read of anybody out there. If I had to, forecast, what I expect is that we're going to see the recovery in our numbers continue, that we are going to see fourth quarter numbers that show improvement again over what we picked up throughout the third quarter. However, it still will be pretty challenging for the economy to rebound to last year levels. It may get close. It may show some amount of stability in many sectors, but I don't necessarily foresee the economy in the fourth quarter seeing such rapid gains that we get to year over year growth. And even if we do, the more important thing is there's no way that the Chinese economy, even though Beijing is getting ready now to announce full year over year growth, that's where all of this is headed. It's very difficult to see that being borne out within the data when for 9 months across major indicators, even in official data, you've seen a lot of contraction, and in our data year over year you see contraction, and then in the final 3 months you pull so far ahead that you get year over year growth for the entire year. That's very difficult to see, even though that's exactly what I think we're going to see in the numbers coming out of the NBS and probably what the narrative on the street is going to be very soon.
Thank you, Shazad. That was very informative.
You got it.
And thank you all for watching. To read more on this article, check out asiatimesfinancial.com for the world's best news on Asian markets, economies, and more. I'm Christine Zhou reporting for ATF TV from London.